Hello everyone, this is Team Trade Oxygen here. So welcome to another live market analysis for the Monday, the 30th September 2024 for the micro E-mini NASDAQ index futures. So these are live analysis where we took a live trade. So the trade is on play. Now, so that looking at the economic calendar, you can see there is some high impact news at 1:55 New York time, Fed chair speak. Okay, so there is a chance of volatility during the day. So that is the economic calendar. So now let's look at the daily chart. Now before that, before looking at the daily chart, I would like to show you the current trade in play. So the current trade we took based on the analysis has given a risk to reward ratio of 1 to 2. A very quick trade taken when the New York 9:30 a.m. started. So this is that trade, which is on the 1-minute chart, which is a profitable trade. Now let me quickly, while the trade is running, let me quickly do a live analysis of how we took this trade. So it's a winning profitable trade. So what we did was when we look at the daily chart, so let me quickly take you to the daily chart. Okay, so in the daily chart, so the daily buyers, so don't look at this text is for the 27th September. So let me move it a bit, that text. Okay, don't have a look at it. So I'm doing analysis over here. As you can see, that was for that note is for the 27th of September. So looking at the daily chart, we can see the daily chart has formed a swing high, and you can see on Friday this the bearish candle formed, so it made a swing high. Now, what are the chances? Let me take the arrow. So, what are the chances of the daily buyers? So, on this date, like today, well, there's two possibilities like for the daily buyers. So the price could go and clear the buy side liquidity residing here. In that case, the daily buyers can be bullish. But at the same time, because it has formed a swing high and there's a bearish candle, there's a chance that today's candle being bearish, meaning the daily bias is bearish. So, so which means there's no 100% clear daily bias today, right? The chance is there for both sides. So when we have a situation like this, when we don't have a clear daily bias, what one option is not to trade, right? But the other option is to take a quick trade, which is this trade, which is currently running profitably, right? So at the moment now it has reached 1 to 2.5 profitability, and I will explain how we took this trade. So option 1, don't take a trade because we are not sure about the daily bias. Option 2, take a trade but take it very carefully, conservatively, but it should be a quick trade where you quickly take the profits. For example, if it reaches like say 1 to 2, 1 to 2, you take the profits and you come out of the trade, right? Which is basically what we did. We took profits. In that case, like if you are to trade when the daily bias is not clear, you have to go to the low level charts and see what's happening. So that is what we at Team Trade Oxygen did. So let me show that analysis to you now. So we went to the 1 hour chart, and this blue line is the last week from Monday to Friday, and this blue line start is this week. So last week, as we discussed even in the last week videos, the price rallied up and then it came back down towards the day what you call the weekly range, right? We discussed about that on the last week, and on Friday also that it coming and finishing it more towards the weekly range. But yeah, we discussed it last week. But then today, when we had a look at today's price action, I mean today means this week price action, we can't see much of price action here clearly. That means we are not sure whether the price will go down or whether the price will go up. And also we don't have a very clear idea in the daily chart as well. So we can't get much in the hourly chart. However, then the question is, how did we take that trade, right? So what we did was, we went and had a quick look at the 15-minute chart. Now, when we had a quick look at the 15-minute chart, what we noticed was this blue line over here is this week's this week's price start, right? Over here. So today is Monday, so it started from Sunday. We can see this blue line. So the price started on Sunday over here, and price, this is the Asian session. Okay, this is what happened, and then we can see the London session took the liquidity below the Asian session, so it's a liquidity run. Okay, that is why after grabbing the liquidity below the Asian, there is sell side liquidity. So what London did was, today it grabbed that sell side liquidity. When it grabbed sell side liquidity, what the chance is to go to run upwards. Why? Because sell side liquidity, smart money if grabbed sell side liquidity. So then what smart money does is, when I say it's grabbing sell side liquidity, what I mean is smart money will buy, because they sell entries, sell stop orders here. So the smart money will buy and push the price, and you can see if smart money buy here, they have to take profits. So then they have to sell. So to sell, they need buyers. So you can see in this swing high over here, there are buyers. Why? There's buy side liquidity. Now, if you are not sure why there are buyers here when there's buy side liquidity, and if you are not sure about what I said here about sell stops, don't worry, subscribe to the channel and click the bell icon. We will release individual videos explaining each of these things. But the point of the point of these videos, or the focus of these videos, is first of all for you to give a feeling of how the market operates. So at least you see some traders, like we at Team Trader Oxygen, how we take trades. Like, so then when you see how senior traders take the trades, then you will feel how, like, you need to feel the market first, and then we can take you to the next level of educating step by step. So this is for you to feel like, and to give you confidence that there's a systematic way of trading. Okay, so keep subscribed and await for those videos. Anyhow, so then smart money took profits over here, as I said, and then the other side of the stories, one could say, okay, because there were buy side liquidity here, then smart money can again sell. So this is on hindsight, like this has already happened, so it's easy to explain. So when smart money sell, how do we know smart money selling? You can see a significant displacement here, right? You can see a significant displacement here. Let me stop it from here, and then let me just move the chart like this a bit. Okay, so just focus on this price action, what I'm showing over here. So because the smart money, there's displacement here, there's a chance that the smart money has again sold here. How and why? Because there's buy side liquidity here. That means there are buyers. Why are they buyers? Because the price has gone down. So some uninformed traders will consider this as a resistance level. So when they sell here, right, even including smart money, but smart money knows to sell and take profits and exit. But there are some traders who thinks, okay, they sell here, but they don't take profits here. They think the price is going to go down, uninformed traders. So they are still in the trade. while smart money has exited the trade here, but some uninformed traders will still hold the trade thinking, okay, this is a retracement. But then smart money will uh, grab their stop loss orders. So, so that is why there are, so if someone sells, their stop loss is a buy. I know it's confusing for you all when we talk about this, but don't worry. Just feel this, feel the video, feel what we explain here first, okay? And then you will be able to come to this level of understanding, right? It takes a bit of time, but we will help you to reach this level. So what smart money has done it has sold. How do we know? Because of the displacement. And then when they sell, where will they take their profits? So when they sell, their take profit entry is a buy. So for them to buy, there need to be sellers. So below this London law, there are sell stops or sellers. So what? So this is based on ICT concepts. So here what smart money will do is they will sell here and they will go and kind of take their profits here, right? That all has happened. But still, why we took this trade? I'm again showing you the running trade in the 1 minute chart, which is in profit mode. We have already taken partials, but just showing now it has reached 1 to 3 risk to reward ratio. But we have already taken partials at a couple of levels. So just showing you that it was a winning trade. Now all of this in hindsight, but if you ask from me, okay, did I explain why I took this trade here, why we at Team Trader Oxygen took this trade here? No, not yet. I still did not explain that part. I'm going to come into that now. Now, when the London 9:30 open today, right? So this is where we took the trade over here, where I move my mouse. What we noticed was after grabbing, okay, now if you were confused of what I said here, forget about what I said here, okay? Because if you focus from this point onwards of what I'm trying to tell, you can also understand the important points of why we took the trade. Anyhow, so what we noticed is when we open the charts at 9:30, we noticed that at this point the price has grabbed sell side liquidity. So it has cleared liquidity. The moment we see sell side liquidity grabs, what we understand that it is okay. It has taken the sell side liquidity and the price has run up. And what we noticed was, this is a significant point. So let me delete all the other red color parts. So because you don't need this part now. Right. The important point is from here. Now at 9:30 we noticed that the price grabbed the sell buy side liquidity above here. So because this is a resistance, uh, there are traders who will sell, then their stop loss is here, over here. So their stop loss is residing here. So when they sell, their stop is a buy order. So there's a lot of buy side liquidity here. So what we notice at 9:30 is smart money or the algorithm, let's say the price algorithm, has cleared that buy side liquidity. What does that mean? What that means is when the price cleared this buy side liquidity, and then what you do according to ICT concepts is, okay, now first thing, we are not sure the daily bias, right? But even though when I say we are not sure about the daily bias, what I said was, if I take you again to the daily chart, what I said was still it has formed a swing high. So if there's a swing high and if it's a bearish candle, there's a chance the price can come down and clear some of the liquidity down here. So because we have that understanding and we can see there's a swing high here and we can see a bearish candle here, and then as we understand the price can go down slightly in this area, we have that in our mind, right? And when we had that in our mind, and when we notice at 9:30 algorithm clears the buy side liquidity here, allowing smart money to sell. Why? Because there's buy stops here. So that means there are buy orders. So the smart money can grab that buy orders, meaning they can sell, right? So for them to sell, they need buyers. So there are buyers here, uninformed traders. So the smart money grab that. So is that enough for us to take that trade what I showed earlier? No, that's not enough. What we need to see now is, okay, we can see the algorithm has moved the price up, and then at this moment what we thought was there's a chance that smart money will start to sell. But how can we confirm that smart money will start to sell at this moment at 9:30, right? How can we confirm? For that, we went to lower level charts. That is where we took the trade. So when we went to the low level chart, okay, now this is the interesting point. This is that arrow I drawed early in the 15 minute. So this is where it grabbed the see the buy side liquidity residing about the London session. Now this is the 1 minute chart. See, we noticed at 9:30. So this is 9:30. We noticed that at 9:30 the price. Let me draw it here. Now this is the interesting point. You got a lot to learn from this channel. So we notice at 9:30 the price went up. Now we up to now with what I told, the chance is for a sell side entry because of the smart money grabbing the buy side liquidity. So but how can we confirm that there is a smart money selling happening here, right? So we had to wait till all this price action happened. So it's a choppy price action. We did not take the trade, but you can see we took the trade here. Why did we took the trade here? That is because after all this choppy price action, we noticed that a significant displacement happened here. This black color candle, bearish candle. So when we saw this significant displacement, now remember we have, if you look at our previous videos, you might remember what we told you all was trading is a game of probability. So you need to increase stats or reasons to make your trade highly probable. Now what sort of a trade are we looking at the moment? A sell entry. Why are we looking for a sell entry? Because in the 15 minute the price grabbed buy side liquidity, right? The moment the price grabbed buy side liquidity, and okay, I'm giving you the logic. And when we see in the daily chart, when we see a swing high and when we see the Friday bearish candle, there is a chance, as I told earlier, of price coming slightly down. Now that is what I said, high probability. Trading is a game of high probability. So now we are increasing our reasons, meaning the probability of taking a sell entry. So we are thinking now there's a chance of price coming down. This is price action. This is we are explaining you a price action based on ICT concepts. And based on that, I'm now revising again. On 15 minutes, we saw that the algorithm grabbing buy side liquidity above the London session. That gives us a hint that smart money can sell. Why? Because there's buy entries here. So they can sell on huge volumes. So they can grab all these buy entries, and what they do is they sell. So when they sell, they are grabbing these buy entries. As I said, but we are still not sure. Then that is what I said. Okay, with that context, so now we have a couple of reasons for a quick sell, right? Is that enough? No, not enough. Then what you have to do is, what we did was, with that understanding, we saw at 9:30 price coming up. We call this as the Judas swing, right? The power of three concept, ICT power of three concept, or the ICT Judas swing, right? What is the Judas swing or the power of three? I will explain that, right? This price move up, Now when we are looking to sell, this price move up again, showing the, so this price move up. Now I'm showing you the power of three concept, or the Judas swing, is this line over here. I'm showing at this moment is the New York midnight opening price. At midnight opening price, the price at this moment is above that. According to ICT concepts, when we are selling an entry, when we are taking a sell entry on a day trade, it's always beneficial to sell it above the midnight opening price, right? Which means it's a good price to sell, right? Okay, then if you ask why is it a good price, we will explain that in future videos. For now, we want you to feel what we are telling, okay? So you understand that there's a sound logic here. You need to build up your confidence first. So for us, it it is giving us another reason to sell here because the price is above midnight opening price, power of three concept. So this price run coming up, this run up from here to here, right? The price run coming from here to here is the Judas swing, right? It is the false move to trap traders. So we notice the Judas swing happening here, right? The Judas swing. And when the price come up, we call it as the power of three. So now the price, right? And we in the power of three, we accumulate the, so the we will have another video explaining the concept of power of three, right? So it's based on starting from accumulation, right, and manipulation and distribution. So it's accumulating and it's manipulating traders on a wrong direction, and then the distribution happens. So from here to here with the Judas swing and also with the false move, the smart money will start to accumulate their sell entries here, right? And they will manipulate by sending traders in the wrong direction. So a lot of traders, when they see the price going above this, they will think the resistance is broken, and some traders will start buying, thinking, okay, the price is going up. But that is the manipulation part. So their smart money is manipulating uninformed traders. So when they start buy, and also when there's the previous buy stops here for whoever sold here, all that is grabbed by smart money with their sell entries. So what we noticed here is the price is above the New York midnight open, as I said earlier, right? So from here, so this is the New York, let me show it from here. So this is the New York midnight open, the price. Now we can see the price went up all the way, right? The Judas swing, power of three, and grab the buy side liquidity, right? Smart money accumulated the positions, and manipulated in the wrong direction. So some uninformed traders started buying. Then smart money can sell in huge volumes, because if they want to sell in huge volumes, they need a lot of buyers, wrong side, in the wrong side, so they can grab them. And then after that, this price leg down is the distribution, accumulation, manipulation of wrong in the wrong direction, power of three, Judas swing, and the distribution. Distribution is where the algorithm takes the price down, and smart money takes, when they sell here, when the price distributes towards down, which displacement, then their sell entries are now in profit. See now, so that's the concept, right? But still, how did we take the trade here where I move my mouse? For that, we went into the low level chart, as I said, 1 minute chart, right? Now with that understanding, this arrow up is the Judas swing. You can see this over here. One second, let me take the arrow. So this arrow here is the Judas swing. This blue color line is the midnight sorry, the weekly opening price. Now you can see when the price came in the Judas swing, when that means the price going in the wrong direction to trap traders. You can see that now the price is above the weekly open, the blue color line. Also the price is above the Monday midnight opening time, right? And also the price is about the 8:30 opening time as well, the New York opening time, which is this red color line. So at 8:30. So all that gave us the idea that price is at a premium level. When I say premium level, uh, when we are to sell, we want the price to be at a oversold level, I'm sorry, overbought level, right? So when the price is overbought, right, it's at a premium level, meaning the price is going up, going up, going up. So the price is high. High means it's overbought, which means the price is at a premium level. And with all the other reasons I explained, with the power of 3, Judas swing, and the price being above the midnight opening time, right? With all that, meaning at this point over here where I move my mouse, with that, when we look at the 1 minute chart, now we have a lot of facts, but still, where I move my mouse here, can we take the trade here? No. Why? No, no, no. Why? We need a footprint to see are smart money really selling. That footprint is this displacement, this huge candle coming down. Okay, so now let me remove all the other candles for you to, let me keep this red one, Judas swing, right? So can we sell here? No, no, because this is the accumulation part. So there's smart money accumulating, meaning they are selling for what? For all the buy stops. They don't sell at once in huge quantities because then the price will go down quickly. What they're doing is they're selling little by little, little by little. For what are they selling? For the buy stops running over here. The what I explained earlier. So they are slowly grabbing that buy stops. That is why it's creating a range, and you can see once in a while that footprint as wicks where the price is moved down, meaning they are grabbing all these wicks. What it tells us at Team Trader Oxygen is this is a footprint for us to understand the smart money is grabbing the entries. Can you see that trading is based on solid concepts, that what I'm explaining to you here? Okay, I know it's little difficult for you guys to understand all these concepts. Don't worry. As I said, subscribe to the channel, click the bell icon. All these concepts we will give you in tiny videos, such as what is Judas swing, we'll give more examples. Power of 3, we'll give more examples. We'll explain what is smart money, we'll explain on another video, we'll explain what is the algorithm. Okay, we'll explain what is displacement, all that. And now I'm going to talk about fair value gap, imbalance. Okay, that also we'll give in another video. But as I said, feel this, okay, that the solid concept. So we can see with the wicks, smart money is selling. So this is where the accumulation happens, and the manipulations happen this by, see these green candles, those are the manipulations to trap traders. And once the smart money uh, may accumulate their positions, you will see that with a huge displacement. So when this happens, right, when this happens over here, right, what we noticed was, I'm going to show you now. Okay, I'm going to click here, right, this, right. So the price move from starting from here, this displacement happening all the way, it made a internal market structure shift downwards. What does that mean? What that means is, listen carefully guys, this is a swing, this is a intermediate swing low. Okay, this is let's say internal swing low, intermediate internal swing low, because the price came up slightly, came down again. So it made, let's say, a price move up, price came down, right? Again the price move up, so it's a swing high, and then it formed a swing low, right? Swing high, came down, swing low. Again, can you see over here, swing high. So there's a swing low here, internal swing low, and a, let's say, internal swing high. So with this price displacement, that displacement ended up here at this point, and it took the swing low. This swing low is broken down. If I increase the size of the chart, so you can see this swing low is broken here. Okay, I will keep it like this. I will draw a line for you to understand what I mean. So from here to here, if I draw the line, just to show you, you can see this wick here. That means this swing low is now broken, but it's broken with huge displacement. That is the smart money footprint. So with that huge displacement, okay, that's the interesting part for us at here at Team Trade Oxygen. When we notice that huge displacement, then we understand the smart money has accumulated and displaced. But then for us to take the trade, we are looking for a price imbalance. So what we noticed was with this imbalance, with this displacement, right? What we noticed was, one second, just checking the daily chart again. Okay, so anyhow, coming back here. So this is a, when the price took this swing low, we call it as an internal market structure shift downwards, bearish. So we got a internal market structure shift bearish right here. That gives us the triggering point, okay, that we could take a quick sell. But folks, listen, it's a quick sell, okay? It's a short sell. Why? Because we don't have a clear daily bias, okay? So when we don't have a clear daily bias, if we figured out a trade, we are going to get into the trade quickly and get out of the trade quickly. Because as you can see, while I'm explaining, the live price is running. You can see the price is now again coming back up at this point. But we have already taken our profits here. While I'm explaining this to you, our team, we got a team of traders. They have taken multiple profits, right? And they have come out of the trade over here. Some of our positions were taken out in these places. We call it as taking partial profits. Anyhow, we have now come out of the quick trade, and overall it was a 1 to, if you look here, it was a 1 to 5 risk to reward trade, but we took partials as varied positions, right? So I will explain you on that. Anyhow, now coming back again to what I explained, with this internal market structure shift, with this displacement, what we now need is a price imbalance. We call it as a fair value gap. So we notice that there's a price imbalance here. So what we noticed was from here to here, from this candle to this candle over here, we notice that there is a price imbalance. When I say price imbalance, what I mean is a fair value gap. So fair value gap is the gap between this candle low and this candle high, this candle closing price, and this candle over here, this bottom of this. If you are not, if you are okay, I know it's not very clear to you what is a fair value gap, but we'll release another video completely just based on fair value gaps. But what's happening here is we notice that there's a fair value gap, right? So with that, we understand now the price can come and fill the imbalance. So that is what happened. So what happened here is after forming a internal market structure shift, and after it forms, so this swing low is broken, right? So up to here, it was where I move my mouse. It was a let's say higher low. From here to here, it was a higher low, right? Like this low, then this low is higher than that, so higher low, right? Let me just draw it here. Okay, so let me click this. So from here, okay, to here, it was a higher low, right? The price formed a higher low, right? But that higher low is broken down. That's the internal market structure shift, because this higher low, or in general the swing law is broken. And when this swing law is broken, that's where we took one more confirmation for our trade. And when it forms this internal market structure shift with the displacement, and when it formed the fair value gap, right, then it's a price imbalance. So that is where we notice that the price can come and fill the imbalance. So basically, if I pinpoint exactly where the trade was taken, once this fair value gap is made, what we do is we place a limit entry, let's say in the midpoint of the fair value gap. So I'm just moving this so you can see the candle, right? I'm just moving it like this so you can see the candle. So the midpoint of the fair value gap, that's where we place a sell limit order. Okay, we place a sell limit order and wait till the price come and hit, and you can see once we place a sell limit order, once the candle finished over here, we place a sell limit order after we notice the fair value gap. Then you can see after that the price from the in the next 1 minute candle, the price came and filled the fair value gap, right, grabbed our entry, and the price went down. Now apart from that, we can also see these green candles here, right? So which is the order block, right? So we are looking for all those while we took this trade, right? Let me show that part as well. So this is a 5 minute chart. So when I say order block, all these consecutive up candles, these green candles, right, before the price coming down, the bearish candles, from here to here where I move my mouse, all these green candles is part of a order block. Again, if you are not clear what is order block, we will release some videos in near future, okay, explaining that. So this is the 5 minute order block, but we were taking the trade in the 1 minute. So out of that, in the 1 minute, we can see the 1 minute order block of that, which is these green candles, okay, these green candles just before the displacement. So this area. So if the smart money is selling, right, the price should not go, okay, the price should respect the order block, the green color lines. If I draw them in another box, right, like over here, this bigger box, which is, if I put another color into that, let's say something like this, that is the order block. So when we see order block and when we see the yellow color box, which is the fair value gap, why did we place our stop loss, right? Why did we place our stop loss above this? Because as you can see, the price should respect the order block and the fair value gap if smart money is selling. I will repeat it one more time. If smart money is selling, the price should respect the order block and the fair value gap if our analysis is correct. Again, understand this analysis is based on probability, right? So we have a high probability of price going down with all the facts I explained, right? So if there's a high probability of price going down, if there's a high probability of price going down, then, right, with that, it should respect the order block and the fair value gap, right? That is the logic here. So because of that, we place our stop loss above the candle where it made the fair value gap. So the fair value gap is here, this yellow color box, what I'm clicking. So what made the fair value gap? Which candle? This green candle over here, because this bottom of that candle and the top of this candle over here, that gap is the fair value gap. So the fair value gap has been formed by this green color candle over here. So we place our stop loss above that. If you want to be further safe, what you can do is you can place the stop loss just above the order block if you want, okay, but then you will get a slightly lower risk to reward ratio. But for safer side, if you are to place, if you are a new trader, you can slightly place the stop loss above the order block. Then you get a slightly low risk reward ratio, but let's keep it like that. So then we place a sell limit order, as I said, and then you can see how the price played. So that was the logic behind the trade we took, right? Also, there was smart SMT divergence as well at this point in the S&P, and if I just bring that as well, right? If I bring that as well, there was SMT divergence happening at that moment, as you can see over here. This is S&P at this is 9:30, right? So in 9:30, you can see the S&P 500 formed a lower high, right? Yes, and you can see at that same time, this is the NASDAQ. NASDAQ, you can see, formed a higher high, right? So when you see this SMT divergence, right, and also when you see the Dow Jones already having strong selling at that point, so you can see this is 9:30. When NASDAQ was going up, the Dow is going down over here, and also you can see S&P 500 could not make a higher high. What does that mean? What that means is the S&P 500, if we take all together collectively, so if you take collectively, S&P 500 price is not going up. That means price is weak. That's why it's not going up. That's why it's forming a lower high. Then the Dow price is going down. That means price is weak. But NASDAQ price is going up, like higher high. That is the SMT divergence. So why is NASDAQ price up? That is smart money accumulation. So it's smart money is accumulating the positions, right? So once they accumulate the positions, then they can push the price down, which is what happened, right? So overall, that is the price analysis of why we took this trade. And you can see we did not hold the trade for long, okay? So we took the trade at exactly at 9:55 a.m. This is the live market. You can see the price is here, but our team trade oxygen, the traders, we exit the price, right, uh, over here. But this is the best possible exit, but we took partials at different points. We took one partial here, like we did not hold the full trade all the way down here, right? We did not hold all the contracts. So we took some partials down when it crossed this over here, these points over here. Then we can see there's a fair value gap. So we took some partials over here, right? And we took some partials. Likewise, we took partials at various locations, and we exit the trade when we saw some significant, price move up. That was a quick trade, and the question is why we did not hold the trade long. As answer is we don't have a very clear still we don't have a clear daily bias. So when we don't have a clear daily bias, we don't hold the trade for long. Okay, so this is like a quick, if you have heard of the term scalping, this is like a quick scalp trade. How long it took for us to take profits from 9:55, right, up to here, let's say the maximum, but we almost took our profits well over here. This is just showing you that if you kept hold, you could have kept holding. So it's from 9:55 to 10:15, 20 minutes. So this trade, if you want, if anyone hold the trade, it's like for 20 minutes, and it's a 1 to 5, like 1 to 4.5. That is a quick scalping trade, right? So why did we take it as a quick scalp? Because the daily bias is unclear, right? But all the other, when, as I said earlier, when the daily bias is unclear, we went to the lower level time. So to summarize this trade, when the daily bias is unclear, what we do is we go to low levels and see if there are other quick scalping opportunities, right? And then we notice this scalping opportunity with all the reasons what I explained to you, with So what are the reasons or what are the facts? Power of 3 played well. The Judas swing played well. There were trap traders. Okay. And we saw the buy side liquidity was grabbed, so the smart money can sell. Then we saw there's possibility of a accumulation of positions and the manipulation, meaning taking price up. So some uninformed traders think the price break the resistance and they start buying. So smart money can sell into that. And then to confirm, we went to low level charts and we saw the real accumulation happening here in this range over here, and the wicks and the displacement, the smart money, the elephant, jumping into the water. We saw the displacement when we saw internal market structure shift. The swing law is broken, right? This swing law is broken, and then we saw in that process, we saw it form the order block and the fair value gap. So this displacement and internal market structure shift down, and the displacement validates the order block. So we are trusting the order block. When I say we are trusting the order block, then we trust the price will not go above the order block, and we put our entry in the fair value gap, the price imbalance. In the next immediate candle, it filled it and it took us all the way into the profit. So this is one simple way of trading, but you need to understand, read the market, right? Because trading, this is not investment advice, okay? So we have to tell this for compliant reasons. This is what we are giving is not investment advice. This is for education purposes only, and this is one way of taking trades. There are other way of taking trades, right? We will talk about that with you all in this channel in the near future. But hope you enjoyed this live trading session. So this is a live trading session where we took a live trade and which we took profits, and we gave you all the reasons, the breakdown for the trade, right? So that you could learn and educate yourself. But remember, trading is not easy, like I explained to you, okay? You need to learn it well. You need to learn the trading concepts and make sure you see all the trading footprints, because otherwise trading is high risk and there's a chance of you losing all the money. So that is why, according to government requirements, right, disclaimers, this is not trading and investment advice, because this is not licensed trading and investment. This is just for education purposes only. We need to make it clear too, for compliant reasons. So hope you all enjoyed this live analysis of the market. If you enjoyed, just make a like, put a like, and subscribe to the channel. It helps, it motivates us to provide more videos for you like this. And we will see you in another video with the post market analysis after the market ends. Until that, stay safe. See you all. Bye.